let's go diametrically opposite to electric vehicles. So how do you think is the best way to play that trend? We did discuss copper briefly because as you mentioned, that copper supply takes anywhere from 7 to 15 years to come on stream, and it's used in pretty much everything in renewable, in electric vehicles. It's the best conducting metal, and that's why it's used pretty much everywhere. What else within that space? Because at least in my opinion, I think some of them can be a mirage. For example, cobalt is used quite commonly in a lot of in a lot of batteries today. But in my understanding, 60% or 70% of cobalt comes from Congo. And that's too much of a reliance for the entire world on one country, and that too. I mean, we don't know how the laws and etc. Governance are in that country. So there is a high probability that that might be engineered out to some other metal which is more prevalent. So which other metal like copper do you think cannot be replaced, and what does the supply dynamic in terms of how long does it take the supply to come look like?
Yeah, well, I think you've got a couple of really interesting questions wrapped up in there. One of which is, what's a realistic look at what EV and renewables penetration looks like, and therefore what will the demand be for the materials there, and how best do investors try and make money off of that? I'm gonna go to the second one first, and I'm just going to point out an interesting statistic to me. So. It's kind of somewhere in the mid first quarter, January, February, I went and looked at the entire market cap of the entire renewables sector as defined by Bloomberg. So it's 635 companies. And this is just wind and solar related companies, and I guess some battery tech in there, but it was not EVs. It didn't include Tesla. But the market cap of those 635 companies was, close to $750 billion. And then if you looked at the other side of the balance sheet, there was also, about $150 billion in debt. So you had almost, $900 billion of enterprise value. The cumulative earnings of those 635 companies with $900 billion of enterprise value, $5 billion. So trading at roughly 200 times. 160 times if you just do it on the equity cap. Flip side of that is, if you believe that renewables are going to grow, and I do, if you believe that wind and solar are going to take increasing share of the marginal electricity generation, and I do, you can buy the companies that make the copper, silicon, manganese. Cobalt, I think, is part of the story. As much as I think it's distasteful to invest in, the Congo, unfortunately, in order to make batteries stable and not catch on fire, you either have to have really sophisticated electronics around them, like Tesla or other manufacturers. But if you're going to make wide-scale, low-cost EVs, cobalt's going to be part of the equation for a while. Okay. But if you take out cobalt, then you got a nickel problem. Because then you have to dramatically increase the amount of nickel that you have. So all of these things will be important. The rare earth minerals that make up for magnets and things like that are all going to be really, really important as well. And so and you just, I think the scale of what people are looking at, we've just gone through a political season where it effectively was a bidding war between different candidates who could promise energy independence and low carbon future and EV, who could promise it the fastest. I swear by 2040. No, I say 2035. None of that had any basis in fact, economics, logistics, physical constraints. When we really look at these things, it's an enormous challenge to get this energy transition. And just throwing random targets out there, while it might be inspirational and aspirational to do so, it's really hard to make an investment case that you think it can go even close to that fast. You had the head of Toyota come out and say, look, I know, the Japanese government has said we want to have this many EVs by 2025. You do realize we'll run out of, battery materials by 2023 if we do that, if we build it at that pace. Okay. Same
Just for
thing.
Japan.
Just for Japan. The
Yeah.
same thing happened in the UK. It was hysterical. UK said, "All right, we've got these great 2040 mandates, and for that, we want to make sure we're 100% EV sales by 2030." And so what is it? I think, can't remember the guy's name. It was the head of Earth Sciences at the British National Museum.
Okay.
Kind of raises his hand in the back of the room and says, "Just so you know, to do that, the UK, which represents 1% of global population, would consume 100% of every year's annual growth in copper. They would consume 300% of the growth in lithium, and 500% of the annual growth in rare earths." So there's a wild disconnect between the anticipation of how fast this will come, and how fast it'll, and the equity opportunity that lies there. So to take this back to how do you invest it from an equity standpoint, you've got this, almost $1 trillion worth of EV enterprise value with, 5 billion in earnings. I've got a single palladium and platinum producing company with like a $12 billion market cap that produces $5 billion in earnings. And if you believe in hydrogen or all these things, they're going to need to have platinum, and that you need to continue to have auto catalysts, because if you still have a lot of cars on the road, we can go from 5 million EVs to 150 million EVs over the next 10 years. It's huge growth, but you're still going to see internal combustion engine cars go from about 1.2 billion to probably 1.5. So there will be more internal combustion engine cars on the road in 15 or 20 years than there are today. It's just math. You cannot transition that fast. We don't have the money, and we don't have the materials. So from that standpoint, I think the way to play it is, the companies that are really involved with these materials that are necessary for the EVs to grow. They won't grow as fast as people expect that they will, but that doesn't matter. They're going to grow fast enough. They're going to grow within the constraints of those individual markets. And that will be, basically price of these raw materials will be the regulator on it.
That was a great answer. And so just a follow-up on that. So some of the metals that you mentioned for EV transition, which is nickel, lithium, I believe you mentioned,
Yeah.
cobalt. So how long does it take for, let's say, a material supply in each of these metals to come up? Palladium, platinum, rhodium that you mentioned. How long does it take for the supply to come on stream once a new field is discovered?
Once you hit go, and it really varies by jurisdiction.
Mm-hmm.
But if you are in a good jurisdiction, you make a discovery. It takes sometimes between 2 and 5 years to fully drill out, run an economic study, preliminary and final. Go out and raise the capital to be able to build it. Maybe that's not a big deal for Rio Tinto, and they can get it done. But then it's typically, for these big projects, 3 to 5 years of construction. So you're talking about, start to finish, if you really hustle, for big projects, maybe a decade.
Wow. And this is for all those metals?
Yeah, this is for all those metals. Some of these things, like lithium, is a little bit easier because a lot of it is, you can do, basically pond evaporation type of but if you're going to do hard rock mining there in lithium, that's probably not a bad timeline. And there are a lot of these projects that have been around. I mean, look, some of the biggest copper gold projects out there, I heard about them, they were drilled out when I was working at Franklin Templeton, 15, 20 years ago. And they still haven't come because they're in the wrong place. People have their vacation homes close to it and they don't want the top of the mountain cut off. So, NGOs and NIMBYs and things like that. It's just, even when the metal is there, it's hard to get out. And sometimes even when you build the mine and you start to get it out, you get these countries that then say, now we're going to tax you more for it. Or that's what we're seeing in Chile and Peru right now in the copper markets. So it's a really hard business. the CEOs have been beat into submission on capital discipline. And I think it's going to take a lot for them to really break that discipline. They're really going to, the market is going to have to show them that they really want the growth. And the only way that they can do that is by, allocating capital and running the stocks up.